All right, good morning, good morning. So the question today is rate buy down. What does that even mean? Does it make sense to do rate buy down with the high interest rate that we're in right now? I don't have the answer to those questions, but I know somebody that have the answer to those questions. So we're going to talk about that in a minute. Hey there, this is KG. I'm a realtor with Fairfax Realty in Greenbelt, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate, contact us below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. So the question is rates buy down. What does it mean to buy rates down? Does it make sense to do that? So I'm talking to the expert today, my go-to lender, Deanna. Deanna, introduce yourself first.
Hi, everybody. Thanks so much for having me on today, Keji. My name is Deanna Furman, and I'm a mortgage loan officer at Guaranteed Rate. Been in the business since 2002, and I'm licensed in Maryland, DC, and Virginia.
All right, Deanna, thank you. Welcome back. We've done a lot of videos on mortgage, and this is another one. So the interest rate now, when you compare it to what it was last year, we're looking at almost 2 points more, right?
Correct. In the grand scheme of things, rates are still decent. It's always a good time to consider investing in real estate because once you get in, you're just going to continue to gain equity. But absolutely, I think that the rate buy down conversation needs to be had. Depending upon how long you're going to be in the house, it could be financially beneficial to do so. So this analysis, if you can see my screen here, I've got the scenario of a purchase price of a house at $500,000 and a 5% down payment, and this is for a conventional 30-year fixed mortgage. We don't, as lenders, just give you one interest rate and say, here it is. There's various factors involved in what determines an interest rate, including number one, your credit score, number two, the percentage of down payment, number three, the loan program, and then there are different interest rates with regards to if you wish to buy down the rate or pay points. What does buy down the rate means? It means that for a fee paid at closing as part of the closing cost, you may opt for a slightly lower interest rate. That results in a lower monthly payment and over the life of the loan, less interest repaid. So if we take a look at this first column here, this shows an interest rate of 5.625, the corresponding monthly mortgage payment, and the projected cash to close. If we dig a little deeper, looking at that 5.625 interest rate, we're going to look at the fact that there are no points or fees associated with this rate. If you look at the very bottom where it says points in gray, there's no points or fees for that rate of 5.625. Okay. Now, going back to the second option, this is a rate of 5.525. Note the payment's a little bit less. It's just about $30 a month less. Now, the cash to close is about $1,500 more. And that is because that interest rate has a fee associated with it. So points are typically 1 point is a percentage of the loan amount itself. This fee of $1,529 is not a full percentage point as a percentage of the loan amount, but it is a nice option potentially. Okay. If we do the calculations and say, okay, if I pay $1,500 at closing as part of my closing costs, I'm going to save $30 a month. In a year or 12 months, that's $360. So you would need to be in the house for 5 years or more in order to recoup that out-of-pocket expense. Okay. If we take a look at the last option, this is the lowest interest rate on this analysis of 5%. You're going to save $184 a month in comparison to the highest interest rate on the analysis. Now, the cash to close obviously is going to be a little over $10,000 more, but the savings is $185 a month. If we go to the breakdown of the closing costs for this scenario, you can see the points or fees are just under $10,000 here. So if I'm spending an extra $9,800 at closing as part of my closing costs, but I'm saving $185 a month, In a year's time or 12 months, that's $2,220. So again, about 5 years to recoup that out-of-pocket expense. But if it's going to be a long-term investment, it may behoove you to buy down the rate if you have the cash and you're comfortable with it.
Okay, okay. So that's a good option. If you're looking at this rate and say this rate is high, I want to buy it down, then you can do that depending on how long you're going to stay in the house, right?
Absolutely. And another way that people can save money, in addition to paying points or opting not to pay points, with any mortgage, if you pay extra towards principal in addition to your regularly scheduled payment, you can chop the mortgage term off to a shorter term and save money and interest that way as well. So for example purposes, we just look at this 5.625 interest rate, the corresponding principal and interest on that rate based upon that loan amount is $2,734 a month.
Okay.
If I divide that by 12, I get $228. If I pay an extra $228 a month in addition to my regularly scheduled payment, it doesn't have to be every month. It could be once a year if you get bonuses. It could be on a quarterly basis. If you put that extra principal and interest payment directly towards the balance of the mortgage every year, in addition to your regular payment, you're going to chop that 30-year term down to 24 or 25 years, give or take. So again, if it's a long-term investment and your goal is to pay the mortgage off as quickly as possible, that's another option in addition to just paying the points.
Yes, so that's, I mean, if you compare that with paying points, if you are not able to, come on with that money, bulk money at closing on the example that we looked at, like $9,800, you can definitely do this and be paying it down a little bit is to achieve the same thing at the end of the day.
Absolutely. And I think the purpose of the rate buy down is more so to get the payment in line with budget potentially versus paying extra towards principal is more so I'm trying to get rid of the mortgage as quickly as possible. Now, another thing to consider, I'm going to switch to another analysis here. With the market cooling ever so slightly and changing.
Cooling, right? Cooling.
Yeah. So depending upon the area, we are seeing price drops. We are seeing listings on the market a little bit longer. We're still seeing multiple offers, perhaps just not as many. So in this analysis that I created, this illustrates a listing and the seller's offering to reduce the sales price by $10,000. So again, sales price $500,000, offering to reduce it by $10,000. So that would make the sales price $490,000. Is that really the best solution for your client? Well, at that 5.625 rate, without paying any points, the mortgage payment's $3,400 a month. And the projected cash to close is $43,000. Again, this is with the 5% down payment and the closing costs all lumped in. Now, another scenario to look at, which is going to save your clients even more money, rather than reducing the sales price by $10,000, what about a seller paid rate buy down?
Okay.
2% would be $10,000. So instead of reducing the price by $10,000, what about a 2% or $10,000 seller paid rate buy down? That would get the client an interest rate of 5.125, and their payment would be $91 a month less. So in the grand scheme of things, wouldn't you rather save $91 a month versus just pay a little less and have a higher interest rate for the home? The cash to close is going to be about $500 difference. And that's because of the down payment requirement is as a percentage of the sales price itself. But all in all, coming up with basically the same amount of cash, but saving $91 a month is a better solution, in my opinion, from a numbers standpoint.
It is. And, the caveat to that is instead of saying, give me closing costs, right?
Exactly. Exactly. So instead of, exactly. That's right. So instead of saying a lump sum credit towards closing costs, be specific in the contract to say this amount is specifically for the rate buy down.
For the rate buy down. All right. So that is the lowdown about rate buy down. Well, Deanna, the other thing that I really like about the way you work is you always come up with different innovative ways of making sure a buyer gets to the table. When we're talking, you're talking about rates lock. I mean, you can only lock your rate when you have a contract, but you have something else that you can lock the rate right now, right?
Absolutely. So typically, when you're pre-approved for a mortgage, you're floating on the rate. And floating means you're subject to market changes, whether up or down. And that's simply because we don't know if you're going to go under contract this weekend or if it's going to take 6 months to find the right house. However, if you are on a tight timeline and you're aggressively searching to purchase a house, we do have lock and roll. And lock and roll is unique to guaranteed rate. This allows you to lock in an interest rate for 60, 75, or 90 days while you're shopping for homes. Extensions are available once you're under contract. If we're nearing that 90 days, we can certainly request an extension on the lock. And renegotiations are available. What is a renegotiation? A renegotiation means after your rate is locked, in the event the rates drop, we have the opportunity of relocking one additional time at no cost to you. Just a nice little perk to know you're getting the lowest rate available.
Wow. Wow. That is good because now you get a pre-approval, this is the rate I'm getting, this is the interest rate and the payment, and you're good. You go back and look at houses knowing that your rate is not going to change because you lock this rate. Like you said, this is for someone that is very aggressive, very focused and ready to buy in 60, 75, or 90 days, which is really doable in any market, right?
Absolutely.
And the other thing is closing, because the market is so hot right now, we're competing as buyers are competing with cash offer that will close in 10, 15 days. So if a buyer does not have the cash, they're doing loan with you, Deanna, do you have fast closing?
We absolutely do. So we've got a couple other tools in the tool belt here. We do offer fully underwritten pre-approvals. We refer to them as power bid. And what that means is not only have I, as your loan officer, reviewed your income, assets, and credit, but the file's been fully processed, barring an appraisal if one is required and title work from the title company. But aside from that, an underwriter's reviewed everything, blessed the file, you're issued a letter stating as such that underwriting's reviewed income, assets, and credit, along with a commitment to lend. This enables us to close faster since everything's been verified up front. In addition to this, we do have something called fast track. So if you're eligible and opt in, that means that underwriting is going to review the file once you're under contract and issue a clear to close, barring title and appraisal, if it's subject to appraisal, within 24 hours. And that enables us to close as quickly as 10 business days. First and foremost, if someone's putting 20% down, the first thing that I'm going to do is see if we're eligible for an appraisal waiver. It's known as a property inspection waiver, rather, a PIW. And that means that the client does not need to pay for an appraisal, which saves a huge amount of time. But also having all the documentation up front enables us to process and close quickly.
Okay, so if you're competing with a cash buyer, which is going to close in 2 weeks because they still have to go through the title work and stuff like that, hey, that's good because now you can say, I have cash too, where everybody's going to get cash at the end of the day and I can close in 2 weeks, which is good. All right. Thank you, Deanna. So listen, guys, this is why Deanna is one of my go-to loan officer. Once she gives you a pre-approval letter, it's going to close unless you go and do something wrong. But if you didn't do anything, it's going to close. And that's what we always do. Right, Deanna?
Just make sure you don't buy a boat after you get your mortgage pre-approval and we'll be good to go.
Yeah, please don't do that. Watch the other video that we did. Not to do when you get a pre-approval. All right. Thank you so much, Deanna. Listen.
Thanks for having me. Always a pleasure. Take care.
Thank you. All right.
My pleasure.
Guys. If you're looking to buy, sell, move, or invest, or buy, or get refinance or finance, contact me below. I'll take care of it. And of course, we have Deanna's contact information as well. And you can contact her to get pre-approval, lock and roll, fast closing. I mean, she has all these things that we can get you to the table quicker than anybody else. All right, until next time, subscribe to the channel. Ciao.